I mean, there's no doubt about it that China has been accumulating gold ever since the People's Bank of China was appointed by law back in 1983 to handle the Communist Party's acquisition of gold and silver. That was 1983. They accumulated as much as they wanted up until 2002, when obviously they decided that the state had had enough. And incidentally, they became the largest nation by gold mine output. And that was a deliberate act of policy. They also imported doré, and they're still being importing gold from outside China, in particular from our markets. Well, the only thing I would say
long term is
that people will have to understand. I mean, put this into context, they have to understand it's not gold going up, but it's the currencies going down. In this case, the dollar. It's the currency falling in terms of its purchasing power. That is why the People's Bank of China, are buying gold. It's not so much they're buying gold; they're selling dollars.
Right.
And do they want to buy another currency? No, they don't. They don't want to buy they don't want to buy euros because it's exactly the same story. Or sterling, or whatever, or even Japanese yen. They don't want to buy those. So where else do you go? You get out of fiat and you get into real money, which is gold, and that's what they're doing. And this is why there's so much speculation, if you like, about China's long-term intentions in terms of guaranteeing the value of the yuan. Will they go onto a gold standard? I mean, there's no doubt about it that China has been accumulating gold ever since the People's Bank of China was appointed by law back in 1983 to handle the Communist Party's acquisition of gold and silver. That was 1983. They accumulated as much as they wanted up until 2002, when obviously they decided that the state had had enough. And incidentally, they became the largest nation by gold mine output. And that was a deliberate act of policy. They also imported doré, and they're still being importing gold from outside China, in particular from our markets. In 2002, they decided that they'd got enough gold, and it was now the time for private individuals to acquire gold. Why? Well, I mean, if you go back to Marxist theory, and this is what they were teaching in all the universities in China, I mean, really from the time of Mao Zedong all the way up until fairly recently. They're probably still teaching it as far as we may know. But they've been saying that capitalism will eventually fail, and that's once it's failed, that the next step is to go into the sort of the communist. I think it would be wrong to think that it's dollar for dollar coming out of equities and bonds and going into gold, because there will be huge losses. The point is that when you get a credit bubble imploding, other than businesses going bust, which means that the debt is no longer valid, which wipes out the credit, what happens is that the value of credit goes down. And here we've got several considerations. I mean, we've got the consideration of equity values. That's the first thing. You've got equity values as collateral for the banking system. You've got the falling values of bonds, and on top of that, of course, you've got the falling value of currency, because currency is credit. I mean, I know a lot of economists think that currency is money. It's not. It's credit, because it's on a balance sheet of a central bank. And then this brings me to a final point, which I actually wrote about in my Substack today, and that is central banks. Central banks who issue the currencies, fiat currencies, are themselves technically bust. I mean, just look at the losses on the Fed's balance sheet, on the Bank of Japan's balance sheet, on the Euro system's various balance sheets, the ECB, the Bundesbank, the Bank of France, and Banca d'Italia, and all the rest of them. As far as they're concerned, if they can see that capitalism in the West is going to fail, then obviously their fiat currencies would go with it. That's why they had a gold policy. And incidentally, it's also why they had a silver policy, which, of course, I think very, very few people really realize. I mean, it's interesting. I attended a conference in New York, which I was speaking at. That must have been about 2011, 2000. No, I think probably about 2013. So we're talking, a bit over 10 years ago. And there were lots and lots of silver exploration companies exhibiting at this conference. And at the time, there was a lot of, sort of conspiracy theory stuff about how JP Morgan were banging the market every 5 minutes, and then you had what was her name, Blythe Masters, who was head of the commodity side. She deliberately went on I think it was CNN, to if you like, make it absolutely clear that JP Morgan did not take positions in the silver market. Now, of course, everybody running the conspiracy theory sort of thought, well, yeah, this woman's lying. But I can tell you, I've known people like Blythe Masters, and they are extremely careful about what they say in public. They really are. There's no way she was lying. So we know that. So going back to the conference, I asked these silver miners, I said, right, when you produce your silver output, doré, whatever, how do you turn it into cash to pay the wages and pay all the energy bills and all the rest of it? And they all said exactly the same thing. A man from Glencore comes around, he assesses the value of the doré, and then they're paid by a bank, which presumably was JP Morgan, because if we're talking about a large lot like Glencore, it's obviously JP Morgan. It's then shipped off. And I said, well, where's it shipped off to? They said, well, we don't know, but I mean, presumably China, but we don't actually know for certain because it's not our business anymore. I mean, we're just paid when it leaves the site. And then if you look at the other end of it, obviously JP Morgan would also be acting for China on the futures market. So what we have, and it's quite easy to understand, what we have is we have silver in the form of doré, but it's still silver, bypassing the market and then being hedged in the market. So that was the suppression. Wow. Yeah. And they were doing this. They've been doing this for ages. And bear in mind that China is something like the 5th largest producer of silver in the world itself. I mean, she produces a lot of silver. And she was importing this stuff. I mean, at the time, it sort of played into her hands because refining silver isn't a very environmentally friendly process. I think the Canadians pretty much stopped it. So, I mean, the Chinese were quite happy to do it. And so they accumulated a hell of a lot of silver. And if you look at, the Silver Institute's numbers and how, there's always a shortfall, certainly in recent years, of supply on demand. I mean, where's the difference come from? I guess China has basically been feeding the market to try and control the price. Yeah, I mean, there's that. And also, of course, they're the largest global manufacturers of photovoltaic cells. I mean, they've got every reason to have a huge stock of silver. Mm-hmm. The other thing I discovered, which was fascinating, was that China's exports in 2023 of silver, I think the figure was something like 250 million ounces. It matched pretty well exactly the Silver Institute's shortfall on its assessment. Now, the other thing that was interesting is if you look where the silver was sent, it was sent to London, it was sent to Hong Kong, I think Singapore was in there as well. Most of it going to those centers. Now, these are not large consumers of silver, but they are financial markets. So, that tells me that they were suppressing the price. We now have a situation where I just wonder whether it's in their interest anymore to continue to do that. And so far as I can see, the 2024 exports of silver have been significant, but not to financial centers. So I think there's a sort of change in China's thinking.